Hi, welcome back to the channel. In today's episode, I want to talk about the rapidly escalating situation that is having a direct impact on the global economy. Oil prices are now surging to levels that we haven't seen in years, financial markets are starting to react, and there are increasing signs that the conflict between the USA and Iran could intensify further in the next few days. At one point today, oil prices hit $126 per barrel, and they are now trading firmly above $120. And to put that into context, oil was sitting at around $60 per barrel at the start of 2026. So basically, prices have doubled in just a few months. And perhaps more importantly, this is not just a short-term spike. We've now had oil trading above $90 per barrel for over 50 consecutive days. And rather than stabilizing, prices are continuing to move higher on a daily basis. But before getting into the detail on all of this, could I ask anybody that hasn't subscribed yet to please hit that red subscribe button? Really helps me with the algorithm and puts a smile on my face. So what's driving all of this? Well, obviously the ongoing issue is the war in Iran, and more specifically, the growing risk of further escalation. Reports are now suggesting that the Pentagon is considering deploying hypersonic missiles, which would represent a significant step up in terms of military capability. At the same time, the United States is also looking to extend the blockade on Iranian vessels in the Strait of Hormuz, tightening restrictions on exports and further reducing the flow of oil into the global market. And this is where the real problem lies. This situation is centered around the Strait of Hormuz, one of the most critical choke points in the global energy system. As we've discussed before, around 20% of the world's oil supply passes through that waterway every single day. Well, it did before the war in Iran started. And to put that into perspective, the disruption caused by Russia during the war in Ukraine impacted around 2 to 4% of global supply. So what we're dealing with today is potentially up to 10 times more significant in terms of the global impact. Now, everybody thought the war in Ukraine had a massive impact. If it's 10 times more, then this is going to be extremely serious for the global economy. Now, let's talk about the financial cost of the conflict itself. The Pentagon in the USA has confirmed that the war has already cost the United States $25 billion in direct military spending, and that figure is continually rising. But that's just the visible cost. It doesn't include the economic losses being suffered by Iran, the financial burden on allies such as Israel, the disruption to global shipping and insurance markets, or the broader macroeconomic impact on growth, inflation, and trade. When you factor all of that in, estimates suggest that the total economic damage is already well above $50 billion and is on its way towards $100 billion, and it's increasing every single day that this conflict continues. Now, this is where things are becoming much more serious, because we are now seeing clear, measurable signs of damage appearing across the global economy. And importantly, this is happening across multiple sectors at the same time. So let's start with energy and transport. We've seen Air France KLM announced that it's expecting a $2.4 billion increase in fuel costs as a direct result of the surge in oil prices. That is a massive increase, and airlines operate on relatively tight profit margins, so this kind of cost shock has to be absorbed somewhere. And typically that means higher ticket prices for consumers, reduced flight capacity, or pressure on profitability and earnings. So straight away, we're seeing the impact feeding through into the aviation sector, which is a key driver of global business and tourism. Now let's move on to the broader economy. Data coming out of France shows that the economy has unexpectedly stalled, with no growth recorded during the latest reporting period. That's significant because France is one of the largest economies in Europe, and this slowdown is being directly linked to the energy shock caused by the war in Iran. Higher energy costs are reducing industrial output, increasing costs for businesses, and weakening consumer demand. So we're already seeing a major European economy being directly impacted. And it's not just energy and transport. We're also seeing a surge in commodity markets, particularly in agriculture. Prices for crops such as corn are rising sharply, what's being described as a war premium is now being priced into global markets. And this matters because higher crop prices lead to higher food costs, which then feeds directly into inflation and disproportionately impacts lower income households. We've talked about that many times before. So this is now spreading beyond just energy into food security and cost of living pressures. There's also disruption taking place in global shipping patterns. Some reports are indicating that vessels that would normally be transporting clean fuels are now switching to crude oil shipments because of the surge in demand and the price incentives being created. This kind of shift might sound technical, but it has real-world consequences. It reduces efficiency in global shipping networks, it creates bottlenecks in other energy markets, and it adds further volatility to pricing. And then we come to the financial markets. We are now finally starting to see stock markets reacting negatively to these developments. Investors are becoming increasingly concerned about prolonged high energy costs, slowing economic growth, and the risk of further escalation. Because if this situation continues, it becomes very difficult for companies to maintain earnings growth. And when earnings come under pressure, equity markets tend to follow. So what's the bottom line here? We are now moving beyond theory and into real, measurable economic damage. We already have economies, particularly those heavily reliant on imported energy and food, starting to report clear shocks. Growth is stalling, costs are rising sharply, and pressure is building across both businesses and consumers. But the key point is this will not be contained. This is not a regional issue. This is not something that only affects oil importers or people buying oil. Every single country, every single company in the world will feel the impact of what's happening in Iran, because energy is at the core of everything: manufacturing, transport, food production, supply chains, and ultimately consumer prices. When oil prices surge like this, the cost increase feeds through into every single part of the global economy, and we're already seeing the early stages of that transmission. But this is just the beginning, because the longer this conflict continues, the more disruption we will see, the more cost increases will feed through, and the more announcements we will get from companies and governments highlighting the damage. This is not a one-off shock. This is a rolling economic impact that is building day by day. So in terms of what happens next, well, at a minimum, we're looking at a global slowdown in 2026. Growth will be lower than otherwise would have been. There is really no question about that at this stage. But beyond that, the risks are clearly increasing. We could start to see companies coming under serious financial pressure, profit warning increases, investment slowing down, hiring being reduced. At the same time, countries may begin to report falling growth rates, weakening economic activity, and in some cases, outright recessions, particularly those economies most exposed to rising energy and food costs, the ones that are importing those goods. And if this situation continues for a prolonged period of time, then the risk escalates further, because at that point, we are no longer just talking about a slowdown. We are potentially looking at the conditions for a global recession, a synchronized downturn where multiple economies contract at the same time, driven by sustained high energy prices, persistent inflation, and weakening demand. So this is the critical point. The longer this conflict goes on, the worse the economic impact becomes. And right now, there is no clear resolution in sight, which means the risks to the global economy are not only significant, they are increasing with every single day that passes. So hopefully you've enjoyed today's episode, you found it useful, informative, and most importantly, thought-provoking. If you have liked what I've said, or maybe you didn't quite like it, but you thought it was interesting, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget, I'm currently running my competition where you can win my property or a cash alternative prize. There's a limited amount of time left now, so if you'd like to get involved and help to fund the channel, please scan the QR code on the screen now or click the link in the description below. I've got some really exciting deals on the go right now. You get lots of free tickets if you buy one, so have a look at that. Thank you also to everyone that supported me in other ways. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member, thank you so much. Really helps to keep me motivated and making as many videos as I can. I'd also like to mention that the Joe and Naz channel is now live. We're bringing fun, food, pubs and banter to YouTube. Our latest video, where we went to the best afternoon tea in Ireland, is now up and running. So it was a fantastic experience. I think you'll really enjoy it. So please click through at the end of today's video. There's a link that will take you straight into that video. Please watch it. Please subscribe. Please watch some of the other content. We need your support. We're just starting out, so we're at early stages, but it'd be great if you could get on board and join us on the journey. Thank you so much for that. And here's something to put a smile on your face.